Hello, everyone. Welcome to today's live session. So, if you're new to this, we do this every day. We try and do it every day. Didn't do it yesterday because I was a bit under the weather, but we do it at 12:30 every day. We take a look at all the different major markets. So we'll look at oil, gold, euro, the pound, and the stock market indices, and really just to see what's driving markets and some of the levels to watch, some of the where potentially the trading opportunities might be in the days ahead. The big announcement this afternoon, it's the weekly announcement, it's the US crude oil inventories. They come out at 3:30 this afternoon. We'll start off by looking at oil because it's pushed higher again. So that's something to look out for later on today. But we're seeing some quite big moves actually in lots of different markets over the last 24 hours. So let's catch up with those. I think that risk warning has been up long enough for now. So let's start off with the oil price. Let's bring that one up. So crude oil. Let's bring up the chart. So this is one we have been tracking it all this year. The recovery in the price of oil. Let me just make that full screen. There we go. And you can see let me just zoom right in. So we'd had some fairly low volatility couple of days this week. You can see just how small these candles are compared to what we'd had last week. So we saw some big upswings last week and then a bit of consolidation over recent days. But we did get yesterday, there's the move yesterday, from a low of 55.80 to as high as 57.64. So we saw just about $1 move yesterday in the price of oil. But more importantly, it pushed the recovery out to fresh highs. So we traded back to levels not seen since mid-November. So we were pretty much on a 3-month high for the price of oil. And there's been a few reasons that we've seen oil recover this year. We are seeing a cut in production by many OPEC countries, which was expected. So I think the hope is it will lead to maybe a bit more of a rebalancing in the supply-demand side of oil. I think Nigeria yesterday came out, which I think it's Africa's largest oil producer, but that country came out yesterday and said that it was going to cut back on production. So limiting supply helps lift the price. So we're still going up. That's the long and short of it for oil. The trend is still up. It is a market that has been overbought, and this illustrates the dangers of just following indicators blindly. I think price action is much more important than indicators. But that the RSI went overbought over a month ago now, when oil was about $52 a barrel, and the price has carried on up. So it's a trend that is still strong. I'm expecting something of a problem if we get as high as sort of 58, 60 area. So these highs from back here, the levels saw in mid-November. But for now, the trend is still up. Let's just flip this over to an hourly chart. If we pick up on the trend just over the last week or so, we can see, a clear trend in there. If we're picking up on these levels, let me just, if we pick up on maybe those lows. Oh, why is that not working? Hold on a second. I think I'm clicking in the wrong part here. So what we'll do, we'll drag that one round. So if we pick up on the lows from February the 11th, so just over a week ago, so the latest bit of the uptrend. What was interesting that we did get the sell-off. When was that? Yesterday, to the lows from the day before. So I'm a big fan of looking at previous days' highs and lows when it comes to deciding where to set stop losses. So we did see the market push lower, and then bang, it's pushed back up, and this is where we are. So in the short term, we've got the inventories announcement this afternoon. If we saw the market under some pressure this afternoon off the back of that, I think the first big level to watch are these lows pretty much for the week so far and the end of last week, from $55.50 through to about 56. Okay, so if the price dropped about $1 from where we are now, it still looks like a buying opportunity, because that has been or had been important support. So 55.5, I think, is the level to watch. But that trend still ongoing, continuing the recovery from that 42 level, the lows that we saw in mid-December. So the oil market still very strong. any weakness still looks like a buying opportunity. Another market, the other commodity that we've been tracking is the price of gold. And again, over the last, 24 hours or so, we've seen the price of gold trade back to the best levels since. How far back have we got to go? So we got gold at the best levels since April last year. So again, with gold, the big recovery chugs on. So there's our recovery off those lows in August last year. So I'm still long gold as a sort of a medium term sort of trade or investment, but I'm just maybe we need to start getting maybe a little bit wary. When we start, if we push much higher from here, the 2017 highs, September 2017 highs, and January, February, March, and April actually of last year, it really struggled ahead of 1370. So even though the price is still strong, we just need to be aware that has been, something of a big ceiling for the price of oil, though price of gold, sorry, those sort of levels. We have seen that trend accelerate in recent months. So for now at least, any weakness in the price of gold still looks like a buying opportunity based on the charts. We have gone overbought in recent days on the RSI. We were overbought back here in late Jan, and it did see the price under a bit of pressure. So it wouldn't be surprising to maybe see it correct from here, but it doesn't change that trend. That trend is still very much up. So I think levels to watch. We saw support before it broke out again through here. There was good support at 1320. We're currently at 1336 on gold. So if it slips much further than here, they're much below where we are now. Just watch the 1320s, and after that, big support at 1300. So again, it's been a bullish move this week for gold, pushing out to a 10-month high, 9-month high, something like that, and still buyers happy to step in on any weakness. So those trends still chugging away. Also, someone asked if we can look at silver a bit more regularly. So let's bring that up. I think we did look at that earlier this week. And I think the silver chart is an interesting one. There's our daily chart on silver. If we wanted to take perhaps a really long-term look at this, we could argue that trend on silver from September 2017 is still just about down. So silver, like the gold price, it has been recovering, off these lows. So off the November lows is the level in silver. And I think what's interesting is we do have these two converging trends at the moment. So I think the big level to watch on silver is maybe around $16.50. If it breaks through there, it starts to look like it's broken out of that downtrend. But for now, like gold, it has been lifted in recent months, but perhaps not quite as clear cut when it comes to silver versus the gold price. And now let's take a look at stock markets. Then we'll get into the currencies. So let's just bring up our chart for. Do we do the S&P or do the Dow? Let's do the Dow. Let's bring our Dow chart up. The Dow has moved 4,000 points higher since the lows that we saw back in December, and it's still going up. Yet again yesterday, just about the Dow traded up to 25,988. So again, the highest levels it's been since early December. So we're trading at 2.5-month highs for stock markets. And what can you say? That trend is still positive. We are still seeing people buying the dips in stock markets. If you've been short stock markets in recent weeks, you'll be feeling a lot of pain. So for now, any weakness in the Dow, for example, still looks like a buying opportunity. If we flip it over to the hourlies, let's just pick up some levels. So we've seen it push a bit higher overnight, sell off. I think the obvious levels to watch, maybe the lows from earlier this week, around about 25,800. After that, the lows from the end of last week, also this trend line around about 25,300. So I think it's interesting, and it's still strong. That's what we can say about stock markets. They're markets that continue to push higher. But I think it is going to get maybe a bit more volatile over the next couple of weeks. We've got these highs left from early December, around about 26,100. the highs from early November at 26, just ahead of 26,300. So pretty much where we are now. The next 400 points up on the Dow were a real problem towards the end of last year, or the last couple of months of last year. So if these markets are going to start getting a bit nervous, then we are pretty much here. So I think it's interesting ones up here. Clearly if we go powering through 26.3, we'll start looking at these all-time highs from October, which is quite incredible considering how weak markets were into December. But maybe we'll see them getting a little bit nervous up here. You can see just how overbought. Again, like the oil price. We've been overbought on the RSI since middle of January, but the market has continued higher. It's pushed 1,000 points higher since the RSI has been overbought. So again, for me, it reinforces that what the price is doing is more important in strong trends than what's going on with the indicators. But it's a market that is still very strong. Let's take a look at the FTSE, because we'd seen that break on the FTSE through 7,200, which had been an important level. We're seeing a bit of sort of back and forth going on here. Let's flip this over to an hourly chart. I think because we've seen a stronger pound, that has put a bit of pressure on the FTSE. Something of a bounce back yesterday, but it's given up all of yesterday's gains. But I think it's going to be interesting if we see it much weaker. We've got so many pockets of support on the FTSE: 71.50, 70.90, and down here, I think the big support on the hourlies from the first week of Feb are just ahead of 7,050. So the FTSE under some pressure because we are seeing a stronger pound in recent days, and that does always put pressure on the FTSE. But it'll be interesting to see if it does snap back ahead of this old 7,050 level. And to wrap things up on stock markets before we look at FX, the DAX, as US markets have pushed higher, of course, the German index is getting pulled higher as well. It's traded as high as 11,500 today. It's given up those gains pretty quickly. It's dropped 100 points off the highs for the day. But again, if we flip out to the bigger picture on the DAX, it's a pretty bullish move over the last couple of days, and it does. We've been tracking this downtrend on the DAX, and it'd be interesting to see if it does mean that finally the downtrend is going to be over. That's a trend that's been in place since June of last year, and it's a market that maybe if we can clear 11,600, we can look for much stronger recoveries for the DAX. But stock markets still strong. Let's take a look at the currencies, because the currencies have been interesting. Let's start off with the pound. So earlier in the week, when we were looking at the pound, maybe let's flip it over to an hourly chart. We've been watching this for much of February. Pound US dollar has just been sliding back. So we've gone as high as about 132 in late Jan, and slid as low as 127.80. But since then, we have seen the market turn around, and we've cleared 130. 130 had been a big hurdle for the pound. So for now, we're still in this recovery mode. Traded as high as 131 yesterday. Today, a fairly inactive day so far, but I think the really big shorter term level to watch, the lows from yesterday, which are pretty much at 130. Okay, so I think if we saw any weakness back to 130, it's arguably an interesting short-term trade. The MACD on the hourly chart, you can see it down here, has given a buy signal a bit earlier today ahead of that 130 level. So for now, perhaps in the short to medium term, the target is for a run back up towards 132, 132.20, assuming 130 holds. Okay, so I think 130 is really the big level to watch for this one. We've seen a similar turnaround on Euro US dollar, maybe not quite as dramatic. Let's just bring that chart up. Let's bring that one up on here. Hold on. So we had seen again the euro in decline for much of this month. We had seen 112.50 hold, bit of a false break below that. But again, over recent days, making some progress up. So it's not quite as dramatic as a turnaround as the pound against the US dollar, but the euro as well, getting dragged higher, maybe trying to establish, something of a new trend off those lows from last week. So the lows last week about 112.30, and at the moment at least that recovery still going strong. So I think in the short term, maybe the level to watch on euro, US dollar. The lows for today pretty much around about 113.20. This trend's going to continue. We don't want to see 113.20 broken by much. Okay, so a bit of a turnaround for both the pound and the euro so far this week. And I think the lows set today are maybe the important ones for these two markets if we're going to see that recovery continue. So that's it, really. Someone's asking about Brent crude. So let's take a look at Brent crude oil. But these all oil markets still clearly strong. Let's bring that one up. Here we go. Flip that over to the dailies. So the UK version of Brent, much stronger recovery versus what we've seen in US crude. So Brent crude has gone from 51 to trade at 67 now. So again, at more than 30% off those lows. It still looks pretty strong. Maybe the next hurdle, these highs from mid-November. So on Brent crude, I think the level to watch, maybe $68.50 a barrel. We're currently trading just above 67. So again, like with US crude, it's a market that is still strong, but maybe will start hitting its head up against some resistance in the short term. Okay, but again, if we're looking to trade it, if we had some weakness this afternoon off the crude oil inventories and it slips back, just watch how it performs near the lows for this week, around about 65.50. Okay, but the oil price is still strong, gold still strong, stock market still strong, and pound and euro turning it around a bit over the next couple of days. So we'll see. We'll see. I think oil is the one to watch this afternoon because we do have those inventories coming out later on today. So we'll see how that performs. Someone's asked about the sterling against the Aussie. Let's have a look at that. So sterling, Australian dollar, GBP, AUD. I would have expected a bit of a bounce for sterling because we are seeing it a bit stronger across the board. Let's have a look on the daily chart. Here we go. This is a great little trend actually that's been chugging away since December last year on sterling against the Aussie dollar. So our simple little trend looks something like that. Big move today, you can see. Let's just zoom in on that. Here we go. So our trend's been chugging along. So if we were looking to buy into this trend, personally, the closest I would want my stop, probably under the lows from last week, just below 1.8. Arguably a better stop is below these lows from Feb the 5th, around at 178.50. So it's still strong, but again, just be aware of how much a problem this sort of 185 through to 187 area has been. So in the short term, it doesn't look ridiculous to expect it to squeeze a bit higher, sterling against the Australian dollar, but just keep an eye on this as a potential barrier for it to start running out of steam. Okay, but that's an interesting market to watch. So we will start wrapping things up there. We'll do it all again tomorrow, of course. To find out more about the company, go to the website, Capital.com. You can download our app from wherever you get your apps from, Android or the other one, iPhone. Any questions after this, feel free to drop me an email. My email address is david.jones@capital.com. And we'll do it again tomorrow at 12:30, and we'll see how oil has reacted to those inventories this afternoon. But thanks for coming along today. Don't forget to get automatically notified. Just make sure you're subscribed to the channel. And if you click that alarm bell notification thing, you get a push off YouTube whenever we go live. But we'll do it again at 12:30 tomorrow. Hopefully see you then.